Now the markets actually have stalled the fall clearly. Saturday's session was brutal, and people are fearing that the fall will continue in the market. But honestly, the reaction of the market is pretty mature, I would say. Let's just take this discussion forward and analyze things a little more in detail with Vaibhav Sanghavi joining in today on the show from Avendus. Vaibhav, good afternoon. How are you analyzing the reaction in the market now? Do you think budget is completely in the price?
No, I think, Ajay, as we saw on Saturday, right, it was an immediate knee-jerk reaction, and partly because we were going into the budget with some sizable expectations. From a market perspective, we were thinking about, some amount of concession on the capital gains. As well, from an alternate industry or alternate investment funds industry, we were, from a category 3 perspective, we were expecting about, some pass-through to come in. But those are the expectations which didn't come through, and probably, you saw some amount of market giving away, at least on the Saturday, the first reaction. Later on, as we analyze what is in there for budget and what are the, bold measures which have been taken, I think markets are finding some legs here, or probably finding some amount of base, and we'll look at, how global markets then stabilized for a further direction on the markets.
Vaibhav, there's a data point which has come in this morning, and that is the IHS Market Manufacturing PMI for India. And, surprisingly, it shows a very sharp reading to almost 55. Did you manage to analyze it, and what do you think would have gone into it, such an improvement coming in on that one?
No, of course, I think that number is something which we, on a prima facie looks pretty good. We are yet to analyze in terms of the details of that kind of number, but on what we are seeing is basically that there is some amount of revival from the retail demand, at least in the last 2 months. So if that continues, I think we would be looking up in terms of the economic data, wherein last time around IIP also have also kind of rebounded. So obviously this kind of data, if continues in terms of the print, then it would be encouraging.
Understand your thoughts on two things, two government paper which is likely to hit. One, of course, is LIC, your views there, and also the strategic stake sale which is gradually progressing on BPCL. But before that, there are some details on that which my colleague Ruchi is gathering from Delhi. Let's get in that one, and then we'll get your reaction on both BPCL and LIC. Ruchi, what are you gathering?
We at ET Now were the first ones to tell you that FY21 will see the record target coming in for the disinvestment department. I'm given to understand now that the government has already kick-started the work to meet its disinvestment target for next year, so much so that BPCL's privatization process will begin in this year itself, which means the expression of interest will be finalized very soon. I'm given to understand in about 2 weeks from now. And the alternate mechanism that is headed by Home Minister Amit Shah and also has Finance Minister Nirmala Sitharaman will be getting together to finalize the expression of interest for the privatization process for BPCL. The idea is to kickstart the process so that by the first half of the next fiscal year, there is a new buyer in place for BPCL. Having said that, we also told you that the government is going to go ahead with the listing process for LIC. They've already started work on the same. I'm given to understand that the Financial Services Department has written to the Law Ministry asking if changes are needed in the LIC Act for listing of the state insurer. Besides that, I'm given to understand as per initial estimates, 5 to 10% stake in LIC could be hived off, and about 10% stake in LIC will mean that LIC is going to be India's own Aramco and will help the government garner over 80,000 crore rupees. Having said that, it's not going to be an easy task, but looks like the work in that direction has already begun.
Vaibhav, you've been looking at PSUs also closely. What kind of companies do you think will show interest for BPCL? Global companies or even Indian conglomerates, larger ones? Vedanta on record has gone on air saying that they will look at it. What are your thoughts there? And also, do you think LIC's offer will also garner good interest from global investors?
See, what we are extremely encouraged by is basically the path towards the disinvestments and probably more towards strategic disinvestments. What it does is basically it's beneficial for all the stakeholders by creating value and wealth across. What it also helps is basically tries to create a good amount of resources for your budgetary requirements as well. We do believe that these are quality assets, and these quality assets would definitely evince huge amount of interest from the global players, especially from Middle East as well. So my sense is basically that any quality asset from the government would be lapped up by the global investors who are actually waiting for an opportunity to invest into a market, in India, where the potential is huge. So my sense is basically it's perfectly right step, and should be done more.
Right. I remember discussing with you the other day, Vaibhav, that you guys are also planning some offshore fund. What are your thoughts on how the foreign investors probably are looking at India right now? Not only the feedback which you're gathering, but also you must have discussed with your industry friends. The reason why I'm asking you is this. January saw huge FII buying, almost 12,000 crore. And January is also the 5th straight month of FII buying. How do you think FIIs are looking at India right now, and how they would have read this budget in your view?
Absolutely. Ajay, see, I think what we need to understand is basically the color of money which has come in the last 4 to 5 months, which you have seen consistent inflow of. We do think that the kind of inflow which has happened in the last 4 to 5 months is largely to do with the passive flows. And when passive flow happens, actually it's an allocation towards emerging markets. And when emerging market allocation happens, then India is by default around about 9% of that flow, which is what we have seen in the last 3 to 4 months in terms of your net positive numbers. If you ask me in terms of active flows and active interest, we are not incrementally seeing very excited interest probably into India. It's just an allocation call which the global investors are making, and that is why we are seeing inflows. In terms of the budget, of course, I mean they will take some amount of time to analyze what's come into the budget, and probably will frame a view within the next fortnight to a month. We will then go do our rounds with the investors once again and see what the kind of fresh interest, if they have any, towards India.
Right. Let's get some of the big FII thoughts on the Indian markets which you've gathered during the day so far.
Understandably, people are panicking a little, certainly as far as markets are concerned, but that has to be taken in context of markets that have been exceedingly resilient for quite a few years now, quickly shrugging off fears of trade wars, higher interest rates, etc. So I think it's quite understandable in the circumstances, and in one sense it's a good thing, and it's a good reminder that markets go down as well as up. Will this be a huge pandemic, the like of which we haven't seen in our lifetimes? Who knows? Certainly the authorities around the Asian region and worldwide are taking quite extreme proactive measures, which is very positive. And there's certainly not that feeling of panic that we saw during SARS. People are being a lot more rational, but one never knows. And of course, fear and greed are the things that drive stock markets, and we're seeing a bit of fear at the moment. We certainly had already been seeing economies quietening a little from our contacts on the ground with corporates and the like, even before this. So this is certainly going to have quite a bad effect, again, depending for how long. I mean, at the moment, things have pretty much shut down in China. Our office, for example, remains closed for another week in China, and we'll see at the end of the week whether it reopens. So things have gone very, very quiet in China. Things were already slowing in China, and maybe this brings growth in China down to the 4% level rather than the 6% level.
I think this coronavirus thing is still evolving. And look, this is a virus which is believed to transmit human to human. So again, the scare is that right now what we are seeing is cases in China, but would these cases get repeated elsewhere in the world is to be seen. So which is where obviously China comes under pressure. But then if we come to India, for India to stand out in terms of allocation, it was very important that growth comes back. And that's where hopes were on this budget, that look, if government gives something for the construction sector, which may get, again, a broad-based recovery in the economy.
Vaibhav, how are you analyzing the auto sales data which was released for the month of January after looking at, in fact, I'll just come to you in a second, Vaibhav. Karunya is also here. Let's get the details of the numbers and then we can talk about the categories and stocks with you. Karunya, what was the data looking like?
Ajay, it's exactly how we expected. Do remember that transitory issues still persist when it comes to BS6 platform. The overall demand continues to be very, very weak. And now, the people and the customers out there still don't have the exact clarity. They're still figuring out their costs, etc., how they will go up, what exactly is BS6 going to offer. So on back of that, wholesales have been weak. The main push has been to clear out the BS4 inventory. That's something that everybody, all the OEMs are now solely and wholly focusing on. So on back of that, even then you will see some green shoots definitely visible in the PV segment. Inquiries also have gone up, but that's what dealers have told us. So Maruti has done fairly well despite a high base being the market leader. They have managed to expand. The margin is very small, 2% growth, but not bad given the overall weak scenario. M&M again came in higher than expected. Tata Motors PV also did better than what we were factoring in. What continues to be extremely bleak and extremely uncertain is the CV scenario, because it continues to be extremely, extremely weak. Whether it's Eicher, whether it's Ashok Leyland, whether it's Tata Motors CV business. Double digit, and this is 25-30% degrowth I'm talking about. Sure. And month on month also they've been either flat or they have seen a degrowth. So no recovery absolutely in the purview. In view at this point in time. Two-wheelers, again, it's a mixed bag really. Nothing to complain when it comes to Royal Enfield. Hero slightly disappointing. Bajaj still awaited. TVS was also largely okay.
Right, thanks very much for that, Karunya. Well, of course, CV are the segment which recover last. So perhaps that's the case which is actually playing out. But within CV, PVs and two-wheelers, how are you analyzing the data and what about the stocks as well? What's your view, Vaibhav?
So we are pretty keen on the auto segment on an overall basis, and primarily starting with PVs and to an extent tractors as well, because we are seeing some amount of interest coming back in the rural economy, and the disposable income because of the food inflation is getting much better there. So we are bullish on the tractor segment as well. Two, in terms of the MHCVs, it's always, as you rightly mentioned, it's a late cycle mover, and we are yet to see some amount of recovery there. Two-wheelers were pretty mixed, but I am hopeful that because of, again, the rural buoyancy, we may see some amount of interest coming back again, the two-wheelers as well. But on an overall basis, autos we are calling out as a pretty good overweight, and we definitely like the whole segment at this point in time.
Let's get to Maruti's view as well when we spoke to them earlier on how things are looking right now.
I don't think one should look upon the budget as the only instrument for making reforms in the economy. In fact, we have seen that before the budget, certain kinds of reforms were made by the finance minister. So that also supports what Anand said, that budget doesn't mean that just whatever was to happen in the year will happen in the budget. So I think reforms were started earlier and they will continue during the year. And our hope is that a lot more reforms will continue during the year.
Is there also, on the other hand, a sense of disappointment that the scrappage policy was not announced in the budget, and you also did not hear anything to do with GST taxation as well, although that's something that the states will have to look at?
So I'm not disappointed at all, because I know the scrappage policy is in the pipeline. We didn't expect that the budget is the instrument for announcing the scrappage policy. And what we call a scrappage policy, let's see in what form it comes. Because there's one scrappage policy which is a short-term policy, which just says that for vehicles, you scrap vehicles up to this age and we'll give you so much money. There's another vehicle policy which will ensure that vehicles which are not fit for the road go off the road, that vehicles which are on the road get regular fit certificates of fitness which are genuine, not the kind of certificates which we get these days. And that will certainly help the industry, because it will mean a number of things. It will mean good work load for the workshops, more spare parts sales. It will mean that on the road, traffic will move better, because all these breakdowns you see in Delhi, one vehicle breaks down and you have a 3-kilometer queue. So all of that hopefully will go away if we have a genuine way of giving fitness certificates. So I believe a policy on those lines is going to come.
Absolutely.
Right. Vaibhav, what are your thoughts on financials as a space right now? PSU, large PSU banks, private sector banks, corporate banks. You look at that space quite closely, right? Where are you long or short right now?
No, I think we, as our, we had an interaction earlier as well, Ajay, when I've always mentioned that we are extremely bullish on the financials, and in financials, private banks have always been something which we bear overweight on, and especially now, corporate finance banks, along with right mix of retail banks, is something we would want to carry in the portfolio. With respect to PSU banks, we all have seen that all the write-offs have been taken off. The recognition cycle is, we are at the peak of it. So from here on, you might see some amount of gradual recovery coming on there. With respect to kind of liquidity available from the PSU banks, I think we would go into something which is quite liquid and we can invest in pretty easily. So right mix of both private banks and a PSU bank can probably be taken something in for longer term. With respect to short, we are not looking at anything on the short side, at least on the financials at this point in time.